Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. So I will tell you what's going on the markets, and we have some nice movements today, mainly caused by events that were not in the macro calendar, right? So if you're a trader that you're following a macro calendar, you may be surprised what happened. We had no significant data. And the reason of those movements is Donald Trump and Kim Jong-un, right? We have new tensions between those two countries. So apparently Kim Jong-un wants to send missiles to Guam. He's considering options about sending missiles in that direction to attack Guam and surrounding areas. And on Guam, Americans, they have their Air Force base where they have their strategic bombers there. Donald Trump responded that if he will do that, he will be met with fire and fury. Mr. Tillerson, Secretary of State, commented today that Donald Trump used the language that will be understood by Kim Jong-un because Kim Jong-un does not understand the diplomatic language, so that is why Donald Trump decided to use simple words, but hopefully for residents of Guam, effective. That created a risk-off mode, that switched the markets to the risk-off mode. So what we are seeing here now on the market is escape to safe haven assets. And safe haven assets are gold, Swiss franc, Japanese yen, also on some pairs American dollar. And that is actually the main information. Recently on American stocks we had really low volatility, but this volatility went significantly higher yesterday. We touched local all-time highs, intraday highs, and we went significantly lower after those words about fire and fury were said. And that is it. From the fundamental point of view, guys, what we have here in the calendar is midnight. We'll have a Reserve Bank of New Zealand rate statement, interest rate decision, monetary policy statement, press conference. So definitely huge information for New Zealand dollar. So if you're planning to open a position on New Zealand dollar, I would be extra careful with that, and I would consider, if you really have to do that, obviously if you're a trader who's looking for extra volatility, that's a perfect time for you. Tomorrow we'll have pack of data from UK manufacturing production, industrial production, bit of data from US as always, initial jobless claims, important data for oil traders. I'm sorry, we're gonna have that data today. EIA crude oil stocks change, which will be shown in 2.5 hours. Right, so we do have a risk-off mode, escape to safe haven assets on a few pairs with American dollar. The trend from Friday is continued, so we have a combination of better non-farm payrolls and a stronger dollar due to the risk-off mode, and on some instruments like euro dollar, for example, or cable, it was widely expected by both fundamentals and the technical analysis. So today, Wednesday, is sponsored by Fire and Fury, which again created a risk-off mode, so escape to safe haven assets on the market. So safe haven assets are on the run right now, when we're having a nice movements on gold and on Swiss franc, for example. So, my friends, let me show you the charts now. Okay, why not? We can start with the dollar index. It's not this account. Okay, we can start with the dollar index. We were talking about dollar index yesterday where we are here, and we said that chances for a breakout here are much higher than for the reversal. That is why because we broke the short-term downtrend line on Friday, midterm downtrend line, and we stopped below the long-term downtrend line, which will be you can see that better here. And the price did not create a reversal pattern, but created a continuation pattern. So that is an upswing, that is a wedge, which is a trend continuation pattern. We got a breakout, trend was continued. We broke the horizontal resistance, we broke the downtrend line, and that gave momentum to go higher. And now we're having another wedge, right? This is a wedge, this is very similar wedge. And as we speak, as you can see, we're about to break the upper line of the wedge, which should trigger a buy signal, and the price should make new higher highs. That's what is expected from the technical point of view. Actually, let me switch an account here, because I want to show you two indexes. I want to show you DAX and S&P 500. So this is S&P 500. As you can see, very low volatility, and yesterday a huge upswing, new all-time highs, and then fire and fury down. First support was respected, this one was not, so we can remove it. This one was respected till yesterday, and this one we can also remove it. This one, well, let's make it like that. Let's make it a false breakout here. And that's it. That's pretty much it, my friends. We are still in the channel up formation. We are above this horizontal support. We can break it, but still it won't trigger a sell signal. Only the breakout of the lower line of this channel up formation should trigger a sell signal. So far, as long as we stay in the channel up formation above this horizontal support and this uptrend line, this sentiment is positive here. So we shouldn't go short before 2,449 points. Right? In my opinion, the price getting there will be the sell signal, not before. And on DAX, DAX is suffering very much because of those tensions. Well, DAX has own problems, right, with strong euro, with car makers. We all know that Germany produces loads of cars. And they had this buying opportunity here, inverse head and shoulder formation, left shoulder, head and a right shoulder, and they failed to break the horizontal resistance here. They failed to break the next one, they failed to break the downtrend line. So now they will have to pay for that, and they are defending on this horizontal support on 12,100 points. And once this support will be broken, so the price will get to this checkpoint here. Price getting here should trigger a sell signal. As long as we stay above this support, the sentiment is not positive, but is not very negative. It's not very negative, right? So staying above this level here is fine for the buyers. But once this level will be broken, that should trigger downswing. And how WTI looks like? Well, we had this downtrend line here. I thought that was a false breakout, but we have to readjust our view. So we still do have a pennant. Pennant is a trend continuation pattern. Trend here is bullish, so there are more chances for a bullish breakout. But again, watch out for 61.8 and 50%. I keep my view from yesterday that as long as we stay below those two, there is no clear signal. Breakout of the resistance should trigger a buy signal, breakout of the support should trigger a sell signal. And that's my view, that is my view on the oil. So now we can come back to the Forex market. As we were talking yesterday, that was a rectangle. Rectangle is a trend continuation pattern, so it was more probable that the trend will be continued, and that's what's happened. We have a new resistance. The sentiment is negative on cable, is back on the negative side. We do have this support, but well, we can't try to estimate the potential target for this correction. As you can see, maybe by accident, maybe by not, the closest support is also in the same time, 23.6. I guess the next one is also covered by Fibonacci. Here support, resistance, and a bit higher support. Also trend line here. We can remove this one. We can remove this one because it's an old story. This one is an old story, and this one is an old story as well. Let me change the color of this trend line. Yes, looks better. So ahead of us, we have three supports. This one, and this one. We'll see where the price will stop. Do we have correction equality patterns here? That can be interesting. Okay, let me check something. Silver can be silver, why not? Oh yes. And let me readjust this Fibonacci. Okay. Yes. So look at that. This level looks like a decent support here. Why? We do have 38.2 of the long-term uptrend. We do have a potential correction equality pattern. So this correction is 460 pips, and this one can be 460 pips as well. And we do have those horizontal movements here: support, support, resistance, support. So here, potentially a nice area to buy. I will carefully watch cable in the next few weeks, because probably it will take weeks to get there, and we'll see. American dollar to Canadian dollar, still moving in a flag. Flag actually can go here where is interesting support, resistance, which is 38.2 Fibonacci, and also we can see support, support, resistance, resistance. Or the price can stop here on first one, 23.6. It will be definitely influenced as well by the price of the oil. We have to wait and see. As you can see, Swiss franc is gaining in value here. This pair with American dollar to Swiss franc. So, well, on a few websites I read the explanation that American dollar is gaining strength because it's influenced by non-farm payrolls, and traders are expecting Fed to rise interest rates in September. But if that was the case, American dollar would be stronger here, and gold, for example, will be cheaper. But it's the opposite. So we can see that all those movements here is a pure risk of mode caused by the tensions between North Korea and United States, that traders are not playing Fed cards right now, interest rate cards, but the main market mover right now is risk of mode caused by North Korea and United States. That movement caused by fire and fury and missiles directed towards Guam. This is Australian dollar to American dollar, which was having we are still having this kind of a flag or a wedge. This support, I think we have to readjust it to the recent conditions here, so it got broken. The closest support is here on 23.6. Also, it is, as you can see, it was already used as a resistance here, so that can be the closest support. Sentiment, as long as we stay below the blue resistance, is negative. American dollar to Mexican peso is climbing higher in this flag formation. Let me readjust the upper line and this flag formation. And overall, flag is negative, but as you can see, we're about to break the downtrend line here. So I wouldn't make any actions right now. It's too early to say. Definitely buy signal will be triggered here, but so far we still have some time. And silver is recovering very well, nicely. So that head and shoulder signal from this head and shoulder is gone. We have to readjust our charts. As you can see, Trump and Kim Jong-un brought us nice movements. If you like volatility, you should be happy with the outcome of that situation. Although those channel up lines, etc., are no longer in use, we still do have this horizontal resistance, very important for silver, $16.8 per ounce, and we still have that support. So we can clearly see horizontal resistance, horizontal support that should be in play. Yes, this one, we can remove it for now. Breakout of this resistance should trigger buy signal, breakout of this support should trigger sell signal, simple as that. Gold, oh look at that, gold is having a very good time. Right now we are attacking highs from 3rd of August, but in the longer term we should make new higher highs here. So what's the situation here? We had this smaller flag. Yesterday we broke the upper line of this flag and we went higher here. I told you that breakout of this upper line of the flag should trigger a buy signal. It didn't happen straight away. The price tested the lower line of the flag, so you can see that almost every trader in the world saw this formation and was playing that formation. And that's the power of the technical analysis. We came back below this horizontal support again. I think it got violated and we can remove it. It wasn't respected anymore, but this one is, so we're gonna leave it. In the same time, price broke the upper line of the flag and broke this horizontal resistance. Currently it will be the closest support, very strong important support, $1,264 per ounce. And that checkpoint, price went to that checkpoint, and that opens a buy signal here on gold. Making new midterm highs should open the way to $1,300 per ounce, our psychological barrier on gold. So actually we had this gray area here. on the H4 chart, it makes sense, but on the smaller time frames, not. But upswing, flag, upswing, simple as that. That's what the technical analysis is trying to tell us on many instruments. Euro dollar. Well, yesterday we were telling you that looks like a correction of the Friday movement. So if that was a correction, there were more expectations for a breakout, right? So we actually got a breakout of the lower line of the wedge. The price went lower. Now it's kind of a descending triangle or a pennant. Pennant is also a trend continuation pattern. Descending triangle formation too, so there are more chances that we'll break the lower line of this formation and we will test the long-term uptrend line here. There are more chances, well, long-term, since the end of June. For some of you it's short-term, for some of you it's long-term. I know I'm a swing trader, but I know that many traders are trying to scalp the market. So for them, the trend line from June will be loads of time. And that's dollar index. We are talking about that. So next instrument is British pound to Japanese yen, where we also can see the risk-off mode. And the risk-off mode is an escape to Japanese yen, which is considered as a safe haven currency. We can see that we broke the lower line of this flag, and we were approaching this uptrend line. I thought that the price will try this lower line, crossing of the lower line of the flag and the trend line, but they may test that line before. But in overall, you remember that we are expecting a further decline when the price was here, and look, we are 140 pips lower. And currently, as you can see, we are approaching this long-term uptrend line where we can possibly see a bounce here, but obviously don't take that for granted just because there is a trend line. You need to see a bullish price action first here on that lines to go long. Euro to Japanese yen, that was a strong one, so we broke this trend line. Fibonacci has to be readjusted. No longer relevant, we broke those trend lines here. And the black line is important because it's a long-term uptrend line, and it shows us that the sentiment is negative here from now on. Two potential targets. First one is 23.6, second one is this orange area here, maybe 38.2. Definitely this one, 50% Fibonacci, will be in, well, if the price will continue to fall, that will be a strong support, in theory at least. New Zealand dollar to Japanese yen. Here you also can see escape to safe haven assets. You remember that on my live trading account I went long here. That was a small loss because it was somewhere here. But look, I went here, 70 pips stop loss, let's say, and I lost 1% of my capital, 1.2, and now the price is almost 5 times lower. So I would lose like 6, 7, 8% of my capital, which would be a huge amount of money. That is why you always should use stop losses, because sometimes you can get caught in this false breakout and you may suffer. If you lose only 1% of your capital, you suffer as always, right? You don't suffer actually, that's just a part of bigger winnings. But if you're going to allow yourself to lose 8%, for example, that can be catastrophic for you. American dollar to Japanese yen, we told you that once this blue area will be broken, that should trigger a sell signal. And I think that's actually what's happening. Why this line is important? Because it's the lower line of this symmetric triangle formation. it looks relevant. It looks like the price will go lower, at least here, at least 140 pips, but in my opinion, they can go even deeper. American dollar to yuan, we are targeting the lower line of the flag formation, where we can expect a smaller bounce here, but I wouldn't take that for granted because of this fundamental situation which is surrounding us. American dollar to Polish zloty. Finally, we do have a stronger correction here. The first potential target for this movement is the horizontal resistance 370 and the upper line of the channel down formation. As long as we stay in the channel down formation, in the long term the sentiment is more negative, but I wouldn't go short now because the chances for a short-term movement here are very high, and if you have a opportunity to sell here and here, I would wait to sell higher. I would wait to sell 600 pips higher than selling now. A few last instruments, New Zealand dollar to American dollar. Remember guys, we do have this important event, rate decision in New Zealand, so I wouldn't enter position here. Euro to British pound is bouncing off the channel up formation. On a daily chart, it's done with gravestone doji or a shooting star. It doesn't really matter, but it can bring us a correction. It can bring us a downswing. At least that's what we are seeing today. Small downswing. It's not the strongest signal in the world, but maybe good for a start. Euro to Australian dollar found the local support on 23.6 here. They still cannot break this upper line of the flag, but as we can see, once they will break this level, that movement should gain momentum and the price should skyrocket. I think from the price action point of view that when you have this lower volatility below such an important resistance, when the upswing breakout happens, it's usually very strong. And Australian dollar to Japanese yen, here we had this short position. Unfortunately, it was closed somewhere here, right? We had the short here, it was closed here. If we kept that, we would get much bigger profits, but in overall this situation is definitely negative. Look, two shooting stars in a row on a resistance, on a horizontal, very strong horizontal resistance. We went below 50% Fibonacci, but that was a nice setup, that was a nice short position. Unfortunately, we closed that a bit too early, but maybe you didn't, and you still have that opened. And if you have that opened, chapeau bas, hats off the head for you, for your trade, and I hope you will earn as much money as you can on this trade. Thank you very much for watching, guys. Daily analytical report. I hope you feel more confident about the markets right now, and you can see some good trading occasions thanks to this daily analytical report. Now we will have a short break, and after that webinar about fundamental analysis.